The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I can be reached at 631-647-4694, or you can always find me on the web at themainstreetcode.com. And when we talk about our code, we talk about choice, organization, direction, and education. And we will help hundreds of advisors across the United States, accountants, attorneys, financial advisors with all their insurance questions and needs regarding life insurance, annuities, disability, and long-term care. And today, I have a very special guest, Mr. Robert Bird.
Thank you, Neil.
I hope you don't mind me calling you Bobby.
No, absolutely not.
Bobby Bird.
A lot more people, they tend to know me as Bobby than Robert. So
Bobby Bird, I met a while ago, and we instantly liked each other. I liked you.
Did?
I hope you liked me. Anyhow, Bobby's a holistic planner, and he works out of Melville, and he's an independent financial planner. And like me, like him, we look at your whole picture. You know, it's not one thing fits all. It's what works best for you. Mm-hmm. And Bobby does, he does investments as well as insurance, and he does a complete financial planning.
Correct. Right.
And, there's a lot of things going on in the world today. And one thing I talk about on my show a lot is, listen, it's on everybody's mind. The market went haywire this week.
Right.
Again, interest rates are up more again. Mm-hmm. However, and inflation is on everybody's mind.
Sure.
But now is a great opportunity, a fantastic opportunity to take advantage of these rates while they're here in buying fixed annuities. Now, there are other fixed investments that Bobby sells and handles. I like fixed annuities for a number of reasons. That you have tax deferral, and you can get great rates, and you can guarantee them and lock them in,
right?
Because they're not going to last forever.
That's the key, right?
And while the market is volatile, and if you're depending on that money, you need to put it in a safe place and not put it under your mattress, because of inflation is going to eat your money up.
That's right. Right.
Yeah,
no, there's a lot of options now for savers now that the short end of the yield curve has come up, right? So for the longest time, it's been a detractor to savers to have interest rates be as low as they've been. It's been great for borrowers, but not very good for savers. Now that you have a Fed that's battling inflation by increasing rates, being smart with, perhaps some idle cash, being smart with a portion of your insurable assets to either put them in a fixed annuity, as you said, because those interest rates now have come up, right? And, what the Fed's going to do, and it happens every time that there is a recession, right? The way that the yield curve uninverts, right, is they have to drop rates on the short end, right? So by getting into something like a fixed annuity or even short-term treasuries just to, invest some idle cash, is a great way to take advantage of the higher rates as they stand now. Because to your point, those rates on the high end of the short, or as far as the rates that are higher on the short end of the curve, they're not going to stay that way forever.
Right.
So, it's a good time to park some money, for shorter term needs.
Right.
To take advantage of these higher rates. Yeah.
Right. And the volatility of the market, a lot of people can't afford volatility. And both Bobby and I deal with a lot of people that are retired or, and we have situations. We talked about this the other night. We have a 70-year-old woman we were talking to who is a widow, and her house is paid for, and she's living on Social Security, and she wants to live in her house for as long as she can, and she wants to leave her house to her 3 children. I said, but there's a problem. Tell me some of the problems that you would think, and some of the things that you would discuss about that situation.
Right. So someone who's 70,
right,
owns her home,
right,
and she wants to stay in the home.
Yes.
Right. Is that what you said?
Yeah.
Is it paid for?
It's paid for.
It's paid for.
No mortgage.
Right.
The American dream. Pay off your house. Right?
So it's, if you're on a fixed income, right, the home could be paid for, but your property taxes are still going up. Cost of insurance is still going up. The cost to own and to maintain the house are still,
So you bring a good example, because this happened to a client of mine. So what happens if we're in a storm? Today is a stormy day, and a tree, this happened to an 80-year-old woman, a tree had fallen on her house and created a big hole in the house. She came to me, one of my representatives who works with me bought long-term care insurance for this woman, but she didn't have homeowner's insurance. And she came to me and wanted a mortgage at 80.
Yeah.
What was the problem?
Well, there's not a bank out there that's going to lend to you if you don't have homeowner's insurance.
That's number one.
Right.
Number two, I couldn't believe the rep when he sat with this woman who just sold one product, didn't ask her if she had homeowner's insurance.
Right.
Okay. The third problem was she didn't have the liquidity to pay for it, which we're going to talk about with the 70-year-old. The fourth problem was she had a renter. Now she's got real issues.
Right. Yeah. Like above board or below board?
Below board.
Yeah.
So multiple issues.
Sure.
But let's talk about the 70-year-old. She's in good health today. What could happen? There's a couple things could happen. One is you could have a major expense. Two, she could need help, physical help with long-term care, right?
Sure. Right. Right.
So she needs to have some sort of long-term care protection, or what's going to happen?
Well, the home's going to be taken away from her if she goes to Medicaid.
Quite possibly. The home could be taken away. Her assets could be depleted. The kids won't get anything.
Right.
So the problem is you have this asset here, and I know Tim Kennedy, has a show here. He talks about reverse mortgage, and we've talked about this a great deal, that you need to make this home liquid.
Right.
Because you can't spend the dollars on this, it's filled with money, but
right.
you can't touch it. And on Long Island, the average house, let's say, is $500,000.
Sure.
But what good is it if you can't touch it?
Right. Well, that was just like the case that we had talked about
exactly.
the other day.
Exactly.
Right? For the clients of mine.
Right.
Where, the husband is 70, the wife is 69.
Right.
Right. They own their home outright. There's a little bit of a mortgage that is left on it, but, there's not much. But from a liquidity standpoint, they have a lot of money in qualified accounts.
Right. And
right.
Tell you about what qualified accounts are.
Yeah, so qualified accounts are IRAs, right? Whereby, it's tax deferred. So you're not paying tax on the growth of the money until you start to take distributions out, and then it becomes taxable. So you have a situation where someone is interested and has a need for long-term care, right? They've got 3 sons. 2 sons live across the country. Their other son is married and has a child of their own. So, and the parents don't want to burden their son and daughter-in-law here with taking care of them, right? So there's a need for long-term care.
And it's great that they saved money in their IRA, and that's their whole savings. The problem is it's now 100% taxable with every dollar they
Every
touch.
dollar you take out, right?
So that becomes a problem.
Yeah. Yep.
They have a liquidity issue.
Correct.
So how do we open up the liquidity? The house could be one way, where you can now, instead of doing a big reverse mortgage, you can do like an equity line, like a reverse line or a positive line, either way.
Sure.
But you take that line on the house, all of a sudden you have liquidity. Even if you don't use it, you have a fail-safe fund in case something happens. It's sitting there to say, hey, I need to do this, fix this hole in the ceiling. I've got the money to do it.
That's right.
Or my kid has an emergency. Now I'm liquid. Now I also need to protect it.
That's right. Yeah.
And when we get back, we're going to talk about how you can protect that money. You're listening to the Main Street Code for Financial Success. I'm Neil Himmelstein. I'm here every Friday at 3, and I'm with the famous Bobby Bird. Bobby, how can they reach you?
So, Client First Strategy, they can reach me at 631-892-6690 or rbird@clientfirststrategy.com.
Thank you very much.
Thank
We'll
you.
be right back. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein, and I'm here with Bobby Bird with Client First Strategies. And Bobby, like myself, is a holistic financial planner. We take care of clients. We make sure. Bobby also does investments as well as insurance products. And we hit it off instantly. We have similar backgrounds. I don't even know your whole background. Tell us a little bit about your background.
Sure. Thank you, Neil. So I've been in the financial services industry now for 24 years. So for the last 15 years, I was in the Wirehouse channel.
What does it mean, Wirehouse?
So working for a big bank, a bigger bank, right? So RBC Wealth Management. Mm-hmm. And I saw the value in going to the independent channel.
So in that capacity at the bank, what did you do?
Yeah. And so I was a financial advisor. I was a vice president, financial advisor there, doing the same, kind of work that I'm doing now for clients. But when you're in the advisory channel on the Wirehouse side, you kind of have, a corporate shroud between you and your client. And I saw the value in going to the independent space to remove that. So there is nothing now that separates me from doing things that are in the best interest of my client.
Absolutely.
And that's, I saw the value in it, and there's growth in the independent channel. And a lot of advisors and firms are seeing that. And it's been a growing part of the financial advisory market for a number of years.
And I think it's very important that you have non-objective advice.
Correct.
And not only non-objective advice, a lot of things I find that it gives a black eye to my industry is people will sell you a product. It's not about a product. It's about a process. It's about doing the right thing. Is it the right product? So I hate to say it, but when somebody hands me a card with, and I don't even want to name the company, company with an N, company with a whatever, they may be fantastic companies and they're great ratings, but they're very limited in their scope of product. Mm-hmm. And they're trying to fit you into a product, trying to fit a product to fit you instead of you trying to fit into what you need.
Correct. Right.
And it disgusts me, and I think it should be a completely open world.
Sure. Yeah.
And I'm we're completely non-biased. I'm a wholesaler for 30 different insurance companies. I like to say that I'm completely non-biased as to which one. We want to put you in the one that does the right thing for you all the time.
Yeah, and that's why we work so well together, right?
Absolutely.
Is the fact that, I can present a client case and you give me just unobjective, advice for what's the best solution in this case, right?
Absolutely.
And it's not just solution A and that's it.
No, it's never is.
Solution A, solution B, solution C, and
Right.
what's best for the client.
Right.
You know, and bringing them in.
Right.
It's providing transparent, transparent advice.
Right.
Because
And the other thing is that you need to do is you need to regularly, and I say this every week, regularly review your program. If your advisor is not speaking to you every 6 months, every year, you need another advisor because life changes.
Right.
Just look at the last 3 years, how life has changed.
Sure.
Look at the last 6 months. Look at the last month. I mean, it's evolving like insanely and going in multiple directions.
Right.
Whether you're in the market, or you're not in the market, whether you had COVID, whether you didn't have COVID, look at what's changed. We had 0 interest rates at the beginning of the year. Now,
Right.
look at us.
In such a very short
In
period
such
of
a
time.
short period of time.
Yeah.
Life can change in an instant.
That's right.
And we like you to be, if you're driving down the highway, I don't want you to be stuck in the right lane. I don't want you to be stuck in the left lane. We want you to be in all lanes, right?
Yeah, that's a good analogy.
A good plan, a good financial plan is going to keep you in all lanes. So when one thing goes down, another thing goes up. If you're in all lanes and you have a balanced approach,
That's right.
that advisor has to understand what your risks are, not what he's trying to sell you.
100%.
You need to know, what are you feeling? What's going on in your life?
Yeah.
What's happening with your children and your family?
Sure.
So before the break, I know I digress. Before the break, we talk about real clients, real people that we do business with, and there are real problems that they don't even realize.
Sure.
So we had mentioned liquidity is a big issue.
Right.
And people don't realize that they're doing the right thing. They're working hard. They're putting money in their 401k. They're putting money in their IRA. But they don't take care of that what if. Mm-hmm. Now, there's 2 big what ifs. They always used to say death and taxes. That's not the whole thing.
Sure.
Very important. It's death, taxes, and what if I become disabled or need long-term care.
Right. Yeah.
Now, when we get older, and Bobby does a lot of disability planning for doctors.
For doctors, yeah.
And he's been doing that for a number of years, and I'm jealous of him because that's a fantastic market. But doing disability, because doctors understand disability quite well, probably more than anybody because they see it.
Yeah.
And
right. They see it. That's true.
Attorneys see it.
Right.
Dentists see it. I know every dentist I know has a bad back by the time they're 50. It's just an occupational hazard.
Just on your feet all day.
So
Yeah.
so they buy a lot of disability
Yeah.
insurance.
Well, it's like insuring income, right?
But the thing about long-term care that people don't realize, and you don't have to be 65 to have a long-term care need. It's 2 out of 6 activities of daily living that are not covered by health insurance. And the percentages keep going up and up and up. It's over 70% of us after the age of 65 will need some sort of long-term care.
Right. And it's not just ADLs either, right? It's cognitive.
Cognitive
That's a big part of it too, Neil.
51% of all claims are due to cognitive. That's an excellent point.
And it's becoming more and more common to have early onset
Of dementia
Alzheimer's
or
or dementia. Right. So, it's happening to people younger and younger in age. It's not just an 80 to 85 to 90-year-old issue anymore.
Agree. And the cognitive thing is particularly important, especially, we both, we're at LIAD and both, volunteer our time towards that. And one of the things that you learn and realize and appreciate, or I appreciate also, listen, we have investments and this and that, and let's say we're the main person in charge of money in our house, and people don't realize, well, what if my cognitive goes and the market's going crazy, or I'm in the hospital, or I'm out of commission, or I'm not thinking straight, and all of a sudden I lose half my money?
Right.
Could that happen?
It could certainly happen, right? So that's why you need a durable power of attorney on file, right?
But this is also why you need some sort of protection for you. And what happens if I lose this money and then our retirement's gone? It affects my wife. It affects my children. It affects my parents.
Sure.
Not just emotionally, but financially, now how are they going to live?
Right. It's more of a strain as well on, on the well spouse who's taking care of you, right? It has just as much of an impact on them, right, as it does on the individual who, is suffering this terrible ailment.
And the caregiver might have to quit their job.
Correct.
Take less hours.
Right.
Not get promotions. Sacrifice their life. Sacrifice their retirement. Sacrifice their savings, not just for a spouse. How about for a father or a mother?
Right. Yeah.
And then what happens?
Going through it, right?
And when that happens, how are the kids being tended to? So now we're checking the next generation.
Yeah.
Because maybe they're in college. Maybe you're not talking to them as much. Maybe you're running ragged, running 2 houses.
That's right. Yeah.
That happened with my wife, with her father.
It's the sandwich generation, they call it,
It's
right?
terrible.
Yeah.
What a crisis we're in.
It is.
So we have to protect ourselves. And there's some legal legislation going down very shortly. We're going to talk about it on another show. Thank you so much for being here. Robert Bird.
Thank you very much for having me,
Client First
Neil.
Strategies. How can I get a hold of you?
So you can reach me at 631-892-6690 or at rbird@clientfirststrategy.com.
And for those that don't know, I'm Neil Himmelstein, 631-647-4694. I'm with you every Friday. Thank you and have a wonderful weekend.
Thanks, Neil.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.